let's talk about your fourth quarter results. And I was going through the numbers where FY26 packaging film volumes have seen some bit of impact on account of tariffs and GST disruptions. If you can take us through what transpired in FY26 and what the outlook is going forward, you're expecting a big jump up in FY27?
Good morning, Ashisha, and thank you so much for having me on your show. In fact, as we talk about the quarter four performance, let me tell you that it has been one of our strongest quarters in the recent years. And quarter four, in fact, we achieved sales revenue growth of 12.8% quarter on quarter, which was a very strong recovery over the previous quarter. And even on a year-on-year basis, we had a 5.7% growth in the sales revenue. This was on account of a 10.3% increase in the sales volume, which is on a sequential quarter basis, and a 1% increase on year-on-year. And more heartening was that we had a very pronounced growth in EBITDA for the quarter four, which expanded by 36% in aggregate terms. And overall, in fact, we had a 15.3% EBITDA margin for the quarter, and which was a 260 basis point improvement over the previous quarter, and a 300 basis point improvement over the quarter in the previous year. So overall, this was marked by a very strong performance during the quarter, both in our packaging films and packaging business, as both packaging films witnessed a sales volume growth of 11%, and also our packaging solution business had a growth of 7.1%. Overall, we feel that this trend in terms of outlook to continue for the year as a whole. Our yearly EBITDA expanded by 70 basis points as compared to the previous year, from 12.1% to 12.8%. And moving forward, we expect that this momentum will continue as more and more of our new higher margin businesses start kicking in terms of revenue and EBITDA. Because we have three large projects which are near commissioning, out of which one we have commissioned in the quarter one, our recycling project in Noida, which is expected to start contributing to our revenues and EBITDA during the year. And we also have our 12 billion packs aseptic packaging facility in Egypt, which is coming upstream during the current half of the year. And we have the WPP facility in Mexico that is also on the anvil for commissioning during the H1 of the current year. And as a combination of this, we expect these margins to continue showing this improvement over the current year's yearly margins of 12.8%.